Crypto Trader is proudly brought to you by Element, a full-service investment bank for the digital token capital markets.
The CBOE lists its long-anticipated Bitcoin futures. The crypto market hits a new all-time high of over $500 billion. CryptoKitties cripples the Ethereum network. IOTA rallies 1,000% in just under a week, taking the whole market with it. And you may soon be able to buy a cup of coffee at Starbucks using your Bitcoin, even with the current block sizes. Those are your headlines. I'm Crypto Man Run, and you're watching Crypto Trader on CNBC Africa, still the world's only televised cryptocurrency investment show. If you want to join the show, you can follow us on Twitter at Crypto Man Run. And if you missed the show or want to share the show, you can find it on YouTube. The YouTube channel is CNBC Crypto Trader. In a move that is being hailed by the Bitcoin community as one which will bring some much needed credibility to Bitcoin as a bona fide investment asset, the CBOE finally released their long anticipated Bitcoin futures contracts. In the run up to the futures contract launch, the Bitcoin price went as high as $20,000 on some exchanges. When the Bitcoin finally opened on futures trading on Sunday, the price went down a lot lower to about $15,000. And today, well, we are closer to $17,000. Joining me from Estonia to make sense of this all is Richard Hart, and he is really very excited about these Bitcoin futures. Rich, for those people who weren't on our show a few weeks ago when you spoke about the Bitcoin futures, just remind us what Bitcoin futures are all about.
Way back when we were growing corn, and you were worried whether your crop would maintain its value in the future or not, you could sell it before it was ready. That's what's called a future. So you're growing corn, you want to sell it in the future, and then you set a price for a date in the future, you sell it. Now we've got that for Bitcoin too. So if you want to buy Bitcoin 3 months from now, you can buy a future for a contract which expires in 3 months. There's two kinds of futures. You can either get a cash settled future where you don't take delivery of the Bitcoin, and that's what is on the CME and the CBOE. The CBOE, which launched very recently, which has 4 times less volume than the CME, which is launching in 3 or 4 days, the 17th. So we also have options, or rather futures and options actually, that are settled in Bitcoin, where you take delivery of the Bitcoin on a platform called LedgerX. So right now, if you want to buy Bitcoin in the future and take delivery in the future, you can do it on LedgerX. If you want to just speculate on the value, the dollar price of Bitcoin, you can do that on the CME in 3 or 4 days, or the CBOE today. Some of these brokers won't let you sell. They'll only let you buy, because if you sell a Bitcoin future and the price goes up 10x, then you won't be able to pay the brokerage, and then the brokerage will have to come out of their own pocket to the central clearinghouse, the CME or the CBOE. They lose money.
What you're saying is that what we've actually created here is a speculative asset, or a speculative type contract, because there's no real delivery of the underlying Bitcoin when the contract expires. Is that right?
There is. If you trade on LedgerX, then you take physical delivery of the coin. If you trade on CBOE or CME, then you only settle in cash. There's no physical delivery.
Let's focus on the CBOE and the CME futures, because I think those are the ones that are making the headlines today. When they started launching the Bitcoin futures, the price ran up from about $8,000 to $20,000. What caused that price rise?
Just recently, in the last week or two, Bitcoin has more searches for it than the word gold. And that means that's a lot, right? So we've got massive retail investor demand, and we're just now getting massive institutional investor demand.
Isn't there a risk that maybe people will start short selling the future or pushing the price down on the future? And if I think about it, if there are more non-believers in Bitcoin than there are believers in Bitcoin, it could be that the non-believers push the price down?
The history of Bitcoin is that everyone that has ever shorted it has been destroyed. And that's the reason that if you trade on Interactive Brokers, to go long is 1x margin. To go short is 5x margin. It's 5 times more margin that they require you to short it than to long it. The CEO of Interactive Brokers paid for a full-page advertisement in the New York Times, where he said just as Bitcoin went from 700 to 7,000 very rapidly, so too could it go from 7,000 to 70,000. And all of the shorters would be so destroyed because they could never close their short because the market would be locked limit up every day.
Let's talk about the CBOE futures trading volume. I noticed on the first day that about 3,000 or 4,000 contracts were traded. Give us some perspective in terms of how big that is as a world asset.
The volume on that product is very low compared to existing volumes of existing exchanges that have been around for years and have huge customer bases. It takes time for people to get their feet wet, to understand the contract terms, to see how often it's locked limit up, limit down, to test the volatility. Institutional investors, they don't do FOMO. They don't fear of missing out, smash the order button, like some retail investors do. They get their feet wet and they get in, and once they start getting in and see good returns, they get in big. And that's the stage that we're at. So right now we're doing about a coin a minute of volume on the CBOE contract. That's just a single one that expires soonest in 1 month. And then as people see good returns on that, they're going to scale up their positions and you'll see the volume increase. This concept that futures are going to get shorted into the ground is hilarious, because right now the biggest exchange in the entire world that does Bitcoin is a futures market, and it's been around for years.
Rich, I noticed that the futures are priced with quite a big difference between now and the first contract. But between the first contract and the second contract, there's a very marginal difference. Are the futures traders saying that they don't believe that Bitcoin will go up very much from January to February?
I do not think that you should take pricing signals from a low volume instrument. If I wanted to go and set up an account on CBOE and paint the chart, I could paint that chart to say anything I want because there's not enough volume to fight me. So it's not safe to take signals from markets that are low volume. So these new future markets are awesome. They're amazing. They're a great on-ramp for new people that want to play. However, you shouldn't be analyzing them and trading on them because they are the lowest of low volume and therefore the most likely to give you false signals.
You may soon be able to buy a cup of coffee at Starbucks using your Bitcoin, even with the current block sizes. This week was a significant week for the guys at Lightning Networks, and these guys are the guys that are using their technology to scale Bitcoin. I've got Elizabeth Stark on the line from San Francisco, and she's the co-founder of Lightning Labs. Elizabeth, some of our viewers are not that technical. For the non-technical viewers, can you explain to us what Lightning is actually about?
Lightning is a layer 2 network that sits on top of Bitcoin. It enables instant high volume transacting with low fees, quite a bit lower than we have today. It enables you to batch settle on the blockchain, and you can transact for many, many thousands of times in between. The blockchain ultimately functions as this court or arbiter that can then interpret what are smart contracts that Lightning uses to ensure that your counterparty can't steal your money. So the really cool thing is you can transact, you can have a counterparty, you can send and route through other people, but your funds can't be stolen. And it's the blockchain and the security of the chain that verifies this.
So I'm a layman, I'm not a technical person, I'm more like an investor person. Break it down for me in layman's terms. Let's use like names. Let's use Bob and Carol and Alice. Can you explain to me what this Lightning Network actually does as a layman?
Totally. So in order to get onto Lightning, you have good old Alice and Bob, and they open what's called a 2-2 multi-signature contract on the Bitcoin blockchain. And maybe Alice puts in $10 worth of Bitcoin and Bob puts in $10 worth of Bitcoin. So they have one on-chain transaction that takes about 10 minutes, they pay a fee. Then they're on to Lightning, and they can update the state between each other. So you could have, say, Alice is 5, Bob is 15, then they go back to 10 and 10, Bob is 5, Alice has 15, and so on. But maybe Alice and Bob only see each other like once a year. So it's not that useful, even though they can pay each other instantly on Lightning. Now Alice wants to pay Carol. Turns out Bob can connect Alice to be able to pay Carol. And cryptographically, Bob cannot steal the funds. So Alice doesn't have to trust Bob, and Carol doesn't have to trust Bob. So then you can start routing the way that, say, packets route on the internet. Say if you're connecting from, say, South Africa and you want to get to San Francisco, Lightning can also route payments on the network.
So what you're saying is that you're building a layer above the blockchain, an off-chain layer, which will allow people to transact between each other. And then what you would effectively do is net the transactions off at the end of the day or every 2 hours. Is that right?
Yeah, so it's ultimately up to the user or the user's software as to whether and when they want to settle. But yeah, so for example, an analogy I like to use is, what if in order to send an email, you had to download any email that anyone in the world had ever sent? You'd never be able to send an email. Like, good luck ever doing that, on your laptop or your phone. That is how public decentralized blockchains work. That's why you have these full nodes that download and validate transactions. That's one of the key ways in which Satoshi solved the double spend problem in Bitcoin.
And practically, how far are we from actually using the Lightning Network on the Bitcoin blockchain?
So in terms of when, we're working as quickly as we can. Our team at Lightning Labs, we're about 6 people, not a ton of people. There are 2 other implementations out there that are working very hard as well. Basically, we're doing our best to test it. We did this mainnet test last week where we used real Bitcoin to send Lightning payments. We bought a Starbucks coffee and a Y'all's article, but we're not giving any definitive dates.
So can we assume that it's sometime in the next 2 quarters?
I don't want to give any promises. Maybe it's sooner, maybe it's not.
Elizabeth, you told me that it was a significant week for the Lightning Network this week. What was the significance of this week all about?
Lightning Labs, together with 2 other companies working on implementations, A5, folks based in Paris, France, and Blockstream, their building was called Sea Lightning, had all been working together on an open specification together with other members of the developer community. And this is defining the Lightning protocol so that if any new person comes along and wants to build a Lightning implementation, and we're hearing about some, one may even be coming from South Africa, so I hear, they'll be able to be compatible with everyone else. So the 3 main implementations got together and conducted a test to show that all of the implementations are interoperable and they work with each other. So it doesn't matter if you're using LND or Eclair or Sea Lightning, you can still transact between each other, which was really exciting.
Speaking of scaling, the Bitcoin network is not the only network having their own scaling issues. Imagine building a blockchain that had the promise to change every single industry in the world, to disrupt every single industry in the world. Imagine the number of development hours, man hours maintaining this blockchain. And then imagine that someone built an application to breed virtual kitties, and this application crashed the network. That's exactly what happened to the Ethereum network this week. An application called Kitties clogged the entire network. With me on the line, I've got the marketing director of the company that created Kitties, a company called Axiom Zen, based in Canada. Elsa Wilk, you're the marketing director. Why did you guys choose to go with kitties, of all things, to crash the Ethereum network?
So yes, we decided to use cats to break Ethereum. And the reason for this is, if you think about the history of the internet, cats and the internet go together like peaches and cream. We know that people love cats. We know that they're mischievous in their nature. And we really wanted to test the technology and see if we could put cats on the blockchain.
Elsa, how big is the team that built Kitties?
We're about 18 people strong now.
Is there a big plan here, or is the plan just to breed cats or virtual cats on the Ethereum network? Surely there must be a bigger plan.
We're one of the world's first blockchain-based games, and we feel like this is something that will become a phenomenon and something that, well, we're already seeing it. People are starting to copy us. They've seen the huge success that we've had so far, and we're seeing other people try to duplicate it.
And how long has the team been working on building this Kitties application?
So various members of the team have been working on this for various lengths of time, but I would say a full-time dedicated team, about 3 months.
Okay, be honest with me. Did you expect the reaction and the results that you got from Kitties? But be honest.
No, we did not. Like I mentioned, this was an experiment. We wanted to test the technology. As part of rolling out Kitties, we actually built our own new ERC protocol. It's called ERC 721. It's a non-fungible token, and we had to do this in order to build out what we're calling a crypto collectible. It's different from the ERC 20 that you get in typical ICOs that's built on the Ethereum network, in that it is unique.
I'm a numbers man. Let's look at the numbers. How many kitties have actually been bought?
We have 275,000 odd kitties on the blockchain now.
And are we going to carry on getting kitties forever, or is there like a limited number of kitties that you guys are going to release?
We did decide to put a limit on this, but you can pretty much birth as many kitties as you like right now. We will have approximately 50,000 Gen 0 cats. Now, Gen 0 cats are cats without parents. They come directly from CryptoKitties.
Elsa, you know, I can't imagine losing my kitty. Do these kitties ever die?
No, at the moment, your kitties live forever.
So I know the question on every single viewer's mind right now is the cost of the kitties. How much was the most expensive kitty that you guys have sold?
So we had the Genesis kitty, which was our kitty number 1. And this kitty sold for over $110,000 US.
$110,000 for a kitty. Repeat after me. We are not in a bubble. Stephen Mackey, you're an Ethereum guy. What do you think about a $110,000 kitty that crippled the Ethereum network?
I think it's a great idea. As a person who's been around the digital age for a while and has experienced things like Neopets and stuff online where you collect digital online animals, CryptoKitties was like kind of a no-brainer.
Let's talk about what the effects of CryptoKitties was on the Ethereum blockchain. You practically couldn't get a transaction through on the blockchain. It brought the blockchain to a halt. Doesn't this show the vulnerabilities of the Ethereum blockchain?
It just shows that these platforms are continuing to grow. You know, just over the past couple of weeks since the application for CryptoKitties was released, they've been working on different ways to make their app more efficient. With sending transactions on the network, as well as the gas limit has effectively been risen over time by miners, and so the transactions are processing more smoothly and there's less congestion. So things are just kind of naturally progressing as the Ethereum ecosystem continues to evolve.
Stephen, another one that I've been watching is the IOTA token. It's gone from about 45 cents a month ago to $4.50 today. Do you think the price moves in Ethereum are justified?
You know, in my personal opinion, I like to store my wealth in, you know, battle-tested blockchains like Ethereum and Bitcoin. Storing wealth in a new fragile system like that can be risky, but I think the technologies that they're working on with digital acrylic graphs, I believe is what it's called, DAG-like systems, I think over time they're going to play a major role in scaling certain niche projects.
Steve, you run a fund, and we're going to talk about your fund, but are you holding Ethereum for your fund?
Presently, if I was looking to deploy capital in you know, some of the, you know, the top assets right now, I myself personally would not feel comfortable exposing LPs to the risk like that currently. But, you know, again, like that can change. One of the things that we like to do is look at sentiment, you know, and the psychology of the space over time as there's more, you know, technical knowledge out there.
Stephen, I'm looking at the EOS token here on my monitor, and it's also gone up 10x in the last couple of weeks. Do you know anything about what's going on at EOS?
From what I know personally, the EOS network itself has not actually gone live yet. And it's also currently ongoing through a, you know, what's called like a continuous token sale. So they have like a crowdfunding issuance, and you can purchase EOS tokens from their crowdfund, and it's still ongoing. I believe it was set to go on for a year. Another
one that's really moving is Litecoin. Now, I know that you bought Litecoin at $1. And Litecoin's trading at around $300 today. Is that valuation justified?
I remember the days when Litecoin was trading at less than like $1. And it was always laughable because it always floated between like $1 and like $2 or $3 for a very long time after it had a huge run up to like 40 or 50 bucks. And the sentiment around Litecoin was always like, one day it'll be back, one day it'll be back. But my personal belief was there was too many like very heavy holders in the market of Litecoin for it to really take off. And since it's added to Coinbase, it's, you know, been in another one of those, like what some people quote as the poor man's Bitcoin. But it may very well soon be, you know, the turnout, you know, just another gold mine, which is ironic because it's seeking to be the silver to Bitcoin's gold.
Stephen, last night you guys launched a website for your new fund, Momentum. Tell us a bit about your fund and what you guys are doing.
Yeah, so essentially, we're launching a fund to a private pool of investors, and we're US based, and so we're looking to invest into public crypto markets, like Bitcoin and Ethereum, taking passive long positions and adjusting as the space progresses, as the psychology and the sentiment continues to expand and contract. But also we're investing more kind of like venture style into ICOs, pre-sales, the launch of new utility tokens, public protocol launches, etc.
What makes you guys different? What makes you guys believe that in this competitive environment, you guys can really raise money?
It's what we bring to the table. So, it's a very diverse group of individuals with a diverse, set of cross-disciplinary skills within crypto. As you would know, the more diverse skill set you have, the better. It's better to kind of not necessarily be a specialist in one thing, because crypto grows so quickly.
If you're anything like me, you may have developed a severe allergy to ICOs over the last couple of months. We take so many risks when we invest in an ICO. We take a risk the team won't deliver the project. We take a risk that the project may not work. But now we take a different risk. We take a risk that the Bitcoin or Ethereum that we use for ICOs, from the time that we give it to the ICO guys, will increase in value. And when the ICO launches, the ICO won't increase in value. And they call that risk an opportunity cost. So I've abstained or refrained from getting ICOs on the show. But I went all the way to Russia and I found an ICO that actually may work. And I've got their legal guy here in South Africa in my studio. Stan Shushko, why do you believe that Bankex will buck the trend of these ICOs?
Why I'm sure that our project will be perfectly going on, because we are already on the market for 2 years. So we have already existing products. ICO is a kind of a way of rolling this platform that's already is on the way of coming, because we already have a protocol itself of tokenization. So we are highly level supported with the crypto community, and this is just a fantastic time of coming, and this project is definitely turned the world upside down.
But what does Bankex actually do?
So we have started our business in connection to help banks with the liquid assets, and to help their clients to provide with the funding.
So you take clients who have assets and you create a marketplace and you tokenize the assets that the client has. Is that right?
Absolutely right. But there is one major difference. There are a lot of projects now that offer tokenizing of assets. We do quite another thing. We may make a securitization through tokenization, and we attract funds to expand the existing business of the clients. So we are creating the classical banking services on new wheels of crypto.
So if I'm a person who owns a building, and I need to build another building and I need finance,
we are the right way to you to go.
I come to you and I tell you I've got a building, and you tokenize my building, and you sell the tokens of my building to a marketplace of banks and other financial institutions.
Yes, we we will issue tokens that will be smart contract tokens. We will offer them to the number of investors that maybe not only banks or financial institutions, maybe the most of it will be individuals.
You told me outside about a new coin that you guys are creating for Hollywood. How does the Hollywood coin work?
We are launching this movie coin that will let anybody participate in the creating of the movies, and that will be just a fantastic thing. This definitely changed the world of even of movie making.
Let's talk about your token. So you guys are doing an ICO. I know you guys have had amazing success. I looked at your website earlier and your ICO is almost fully subscribed. What is your token about?
So our token will let this platform go properly. So nowadays we offer tokens, we offer our BKX tokens to investors and they will be used to tokenize assets that will come. But I'm assure you that most of investors that buy tokens now, they see the future of this platform. And there is a kind of there is a very interesting thing of distribution for our tokens, because we have launched the public token sale now, and we keep most of the tokens for institutional investors that will become available right after the token sale ends.
So usually people go to the institutions first and then they go to the public. You guys have gone to the public
Absolutely.
first.
That's correct.
And then you go into institutions.
That's correct. Because we would like to be available for the public.
I'm going to make an assumption that the reason why you're going to the institutions is because the institutions actually need your tokens to operate their businesses.
You got it.
I got it.
You got it properly.
So if our viewers want to get some of your tokens, if there are any left, if there are any available, and I know they are selling out fast, where can they go?
You can go just straight to our site, bankex.com, so all information there available, or we can talk to you later after the show.
So my last guest was from Russia. My next guest is from China, and both of them have businesses that are existing businesses that are launching tokens. Andy, why do you think that your token will buck the trend?
We are actually a $130 million company. We have over 20 million users in our one of the hottest live video app around the world. And our token is based on our experience, taking that to the rest of the world.
Andy, you have an existing business. What does your existing business do?
We're running a mobile live video platform in Asia, launched 16 months, and doing 100 million USD this year with about 20 million users. So like any other live broadcasting, we have a number of broadcasters which are curated. We have 60,000 broadcasters from Morocco to Japan. Most importantly, they make a lot of money. How? Awesome virtual gifts. So we have like virtual bags, virtual shoes, even virtual Lamborghinis.
So your existing business is a live broadcasting video app, kind of like a Periscope. But what you're saying is on your platform, you can actually gift the influencers to say thank you.
Correct. Users can buy one of our about 600 different virtual gifts.
Why are you doing a token sale? What do you need the blockchain for?
Many of our broadcasters are actually influencers on Instagram, YouTube, and Facebook. And as you know, they're all for all their fan base. They can't really generate any money.
Tell me practically, how is this going to work?
So Ron, for example, right? If you go on your YouTube, Instagram, or Facebook channel, right? You say, hey, I'm Ron. Guys, I'm offering today, only for a limited time only, a limited edition of my favorite, maybe helicopter. Only 100 of these will ever be offered. Just for you, all my dear fans.
So how would I use a token to do this?
Our token holds the value for the virtual gifts, right? So you'll be able to put a web link on YouTube, Facebook, Instagram, no SDK, no plugins, no nothing. Fans can click on that web link and a web-based gifting interface will show up. And each of your personalized virtual gifts will be there, and your fans can choose one and buy with tokens to give to you.
How many tokens are you guys issuing?
1 billion tokens.
How many of the 1 billion tokens are you actually selling?
We're selling 30% tokens for 30 million.
What about the rest of the tokens?
The rest would be 30% would be power the ecosystem, and then 1/3 will be kept by the company for the advisors and for company reserve.
What is the use case for the tokens? How do they use the tokens on your platform?
Someone will use token to actually pay for virtual gifts. Because one of the things that we encounter at UpLive is that we have users who are paying us 20 different currencies from 50 different countries. That's a lot of cost, transaction, and also credit card fraud. A single token will help to solve all that problem.
Where can our viewers go to get more information about your token?
They can go to our website. That's the easiest way, www.gifto.io, Gifto.io.
It's been an amazing year at Crypto Trader this year. We're still the world's only televised cryptocurrency show. We've brought crypto to the mainstream investor, we've traveled the world, we've had fun, and we've made a ton of money in the world's most exciting industry. We need to give a big thank you to our sponsors at the Element Group for bringing the show live on air, and to our viewers for watching the show. And in the spirit of the festive season, I've made some cool Bitcoin caps that you guys can have if you retweet the tweet on my Twitter today. So guys, it's been amazing fun. I'll see you in the new year. And until 2018, I wish you many, many, many happy returns.
Crypto Trader is proudly brought to you by Element, a full-service investment bank for the digital token capital markets.